What's going on, guys? Time for another recap. YouTube. So let's get right into it. So after yesterday, we had a huge dump, right? So leading into today, when we have an algo sell this strong, this harsh, we usually come back for confirmation the next day. So when you see all the moving averages just arching with beautiful rollovers, 1 minute chart couldn't even hit the 200, barely hit the 100 in the green we have. So we need a live test of that. If we go back down to the 5 minute even, you're going to see the exact same thing here. If it would do what it's supposed to with the longer standing moving averages here. So this would break down the mains, didn't hit the 666. That's very important. Coming back down, staying under the 10 the entire time. No 50 tag, no 100 tag, no 200 tag, and no anything. So when you see something so strong end up on a hard sell, we have to consolidate and move back up to run back into those moving averages to confirm the secondary move, whether that be up or down. So this morning, I had made some beautiful hidden fib strategies here, and we said stick long till the VIX gap fills and we go hot all the way back up, and I picked right around that 445, and then we had 444.30s here. So we wanted to get back up to at least the 2360 weekly fib if we held above the zero line. So if we hold above the weekly fib, this is the same one we've had on, blue one, for the engulfing, you will come back, usually back take this. This is a little bit of a bonus round, and then it provided you with a gnarly short that we had seen in chat as well. Pure perfect. So let's go over the oscillation in the indicators. So this morning, we have all higher lows and higher highs. We had a little bit of a dip of channel here, right? So we got a beautiful cross into the top territory of the MAC. Same with the RSI, higher low, higher highs. Came to the top channel. Finally broke out. The 1 minute 666 was holding this thing down quite a bit. And then when she topped here, we had a beautiful head and shoulder pattern, right? Midday here. So look at the divergence in this head and shoulder pattern. This thing was gnarly. This is the easiest trade to date I've seen. So not only do we have perfect cross, RSI, right? Really, really, really good patterning, because that is a perfect head and shoulder, right? And you could have easily took any short, right? Above top head and then stopped out over high of day. So when we got this beautiful head and shoulder pattern, the RSI was already showing you divergence, right? So it was going to come back down, come back for that low test. The MAC crossed right here. So short biased here, easy, stop out above highs, easy. And that's it. So when you have a target for this, you usually let it roll, and then you wait for the indicators to get exhausted. So this head and shoulders roll, neckline break, right, is going to end up being right around here for the bottom. So the RSI being overcool, MACD kind of coming back around here, end of the day. Oscillation you can see on the histogram right here on the MACD as the selling waves are stepping aside, which means sellers are getting out of the way. Same with higher low divergence on the relative strength index, and so on and so forth. So how do you measure a play like this, right? So this is one thing that we got to keep in mind how we do. Some very impressive algos there after hours as well. We should watch tomorrow. For the neckline to the headline, so what I like to do on head and shoulders for targeting as well is I'll make a line from the tried and true neck to the top of the head. So this is the shoulder, head, shoulder. This is that neckline right there at the pre-market, low, high, duh. Yeah, pre-market high. So right from that neckline is the pre-market high, right? And then we have to the top. And what I do is I like to take this and I'll just activate it and I'll drag it down to the neckline. So what I did is I measured from the neck to the head, here to here, and I made a line, right? And that's the distance. And I bring it back down to the neckline. So that distance becomes my target short from the neckline of the size of the head to the breakdown. So my target short would have been somewhere in this zone right here to get down to before I covered. So this head and shoulder measured from neck comes down to here. And then, of course, you would have got a big dump into that. You'd have been like, oh, my goodness, this is amazing. After the little bit of the 100 EMA bounce, more confirmation. We had seller beats right here. We had everything for this short, really. I was really sad I wasn't at the PC for this one. This one was really clean. So with those two trades, we had the long breakout, and I told everybody to stay true to the long until we had a VIX gap fill, like I said. So let's take a step back and look at the VIX. The VIX had a gap in between yesterday's highs and live action. So you can see that thing open up right here. Here's yesterday's highs, and the VIX kind of pushed back up into its pre-market high resistance. And then as she fell back down, beautiful to the gap fill. Now that was the last piece of the target. The last, this huge dip right here was all benefit and, extra party round. So something to keep a note too, and how we figured that this was going to be a very long morning. One, the Friday was just an exponential dump. Two, coming into Monday here after a big dump, you need a little bit of a pop confirmation moving averages, which we talked about in the beginning. Three, the VIX being up here in the +2 standard deviation category, that is very, very high. If you back out to here, usually it doesn't move outside of the +1, -1. Here's your aggression center. So for it to be outside into the +2 range or -2 range, that is exponential support resistance. Notice here, i.e. case here for Friday, huge support on the standard deviation -2 all the way up. +2 resistance, right? So as we open up at the volatility index, we know that VIX has to come down a little bit here because we are very much extended and we have a gap. So we came back down for the gap fill, came back down for the relax. So let's take a peek at what we see coming in the future. We need a little bit of prediction here, right? So the dollar is the only thing that's kind of bothering me right now. So we go to the dollar. We're going to look at this weekly here. Now, the weekly, and I put this to a very specific time frame because of the standard deviations that I like to watch. This is exactly 1 year for the weekly, okay? And as we come up to some of these markers, like we're at the highs right now of RSI, right? New highs. We're at coming from the support. We have the MAC right here doing its cross and kind of at the zero line. So right now the dollar can have an opportunity to kind of keep ripping up right here, which should be fine. But the deviations where, again, the +1, -1, just like we talked about, we don't usually go outside of that. So like back here when the dollar pushed into the +2, that was a guaranteed market long. I could go back in time, look at this week where the dollar was into deviation. This was 100% a SPY long. So if I go back to 926 on the SPY, like so, you're going to see that right here, if I could find it. Back around up. Am I the right one? 1 year. Okay. Yep. So back on 926, right here. It's very hard to see back here. Let me do this. Boom. So way back here was the bottom of the 52-week low that we had. So that corresponds 926, matches exactly up with the low and or bottom of the SPY. And that's why you use the dollar and the VIX to track these trades. So let's take back to the dollar real quick. And now we are in that +1, -1. Now these are exponential moves. This is rare, especially on a weekly to get this far. This was part of the dump, right? Coming into that huge bottom. Now we have to forget about that and realize that the +1 and -1 ranges are usual. That's that 80, 88%. Always hit, always stay within range. So you see here on the -1 comes back up to regression trend, comes back down, -1 comes back to regression, comes back down, -1. You see a pattern there, finally breaks over. Now we're at the +1. So in hypotheticals and obvious repeat in history over and over again, you would assume that this +1 hit would be a drop, right? And now remember, we are micro short in the short term, right, on SPY for September volatility. We are macro bullish into the end of the year, closer to all-time high, still until proven otherwise, right? And I know it probably seems a little ridiculous to be macro bullish here on the full rollover, but we don't have a signal above or below the 50 that's super perfect quite yet, right? So this could be a really good trap card where we have a big W play out, starts to hold support. Now we lost the 50. We created another gap right here on the big dump day. Now that was quad witching. Now those days are extremely painful to trade through if you're not used to that manipulation on quad witching days. I didn't even trade this day. We just narrated it for my group and I said, please don't long anything. This thing is going to just drain all the way back because this weekly candle here, what's the daily? Let's go back here. This weekly candle where we get the blue Fibonacci has to fill up to the bottom side. So this Fibonacci right here that we've had, which is the double engulfing that we had traded with the last few videos here, last few weeks, Once the golden pocket is lost, this is resistance then, it has to come back down to the 0% line, which is the bottom, which would fill the body up of that. So when you are here on the week, couldn't get to the 0 line, came all the way back, push up, could not get to the 100. We failed the 100% right here last week, just like we're starting to shy the 0% right now, start of this week. So what does that mean? Well, with the dollar having a potential comeback down right now, and which is bullish for the market, the volatility index filled the gap and decided not to bounce the gap, right? So we are not above yesterday's highs. We didn't bounce right here, yesterday's highs in the VIX. We could actually stay inside that candle, start heading down on the volatility index as well, which would result also in a bullish narrative for the market. Now, if we do happen to hold true and push that and keep on pushing that, we can still get our macro thesis for this long. Now, if we go to a little bit different time from here, I don't use the 4-hour too much, but we have some really big supply volume zones, and we have some really big divergences starting on the RSI. And of course, MAC oscillation right here, the histogram, the sellers are stepping aside on the bars. And I'll explain this indicator in a video coming up this week, but this is a oscillation volume. So essentially it's just supply and demand zones. So right now this is a supply zone, and the supply zone happens to be support, right? So when we had this is a crazy algo. Again, you're going to want to pay attention to that sucker. When we had the supply zone, that just means it's a temporary stop to the downside. It doesn't have to be guaranteed. So last but not least, with the dollar being able to drop, with the VIX having potential downside, we could actually rally back up a little bit and, be okay for a little bit. Now, I'm going to go to the 30-30 chart, and I do want to show you guys some cumulative volume where we had a lot of buyers stepping in here, all the divergence, all the top. Then it got hot, right? Then it needed a relax because nothing goes in a straight line. Well, if you look at supply and demand zones here, every time we get in those demand resistances, which again, you don't really need this indicator, it's just something I like to swap in and out here and there. The RSI and the MAC are more than proficient. But we had a hot move right here that was also in the 1-year deviation. So right here, these white dash lines you see right here, these are the weekly and daily coded inside our chart of the standard deviation 1 year. So that came up to resistance. 30-30 came up hot, 30 came up hot and crossed, and then could not get on. So once we lost this zone right here, lower high, had to come back down to supply. That was a quad witching day. Today, created a higher low on supply, on support. Obviously, the MAC had told you this was going to be the bottom way ahead of time than the oscillation indicator. So again, like I said, MAC much better with RSI. And as this climbed up, we seen the higher low on RSI and the huge cross back here and micro higher low here for that morning pop. Now, ultimately, the only prediction we have is over under the 0% line from the engulfing week. So this blue level right here at 0%, this is our over or under. And right now we are under the 50 SMA daily. So we did get a backtrack on the futures to the daily, but we are way far away from these on the 10 and 50 daily markers. Because remember, when something cuts through right here, so right here is the 50, here's the 10, that's the 50 daily, 10 daily. When something cuts through like the price action did on Friday, and it never comes back and back tests, right? Resistance for confirmation. We never got a back test of that confirmation so it could continue lower quite yet. We've had a lot of chop because of certain instances of news and gap fills and magnets, and then CPI, which forced us up on bad data, quad witching, slammed us down on that. And now what do we have to do? Well, respect to the data. That's it. So right now, this algo is going to be everything for me. So after hours, we're going to take a peek at this guy right here. And I'm going to get back to the 5-minute chart. We're going to pin the head of this candle. And we use this as an over-under with the weekly Fibonacci. So this guy, we're going to do the body. That is going to be a very big zone of direction coming into after hours pre-market. Just watch. It's going to be the head of the 5-minute algo candle we have after hours here. Big old tail all the way down to 437.18. And then we have a MAC release here too. So if this comes up like this on the MAC, hits the 0 line but creates a higher low, we go up. RSI comes up, creates a higher low, we still go up. Supply zone comes back down to the center, comes back up for another push, we go up. So if that decides to hold above the algo, great, we'll take it long. If not, we're going to need another kind of low flying day where we're going to maybe fail back into the actual 0 line, because this is pre-market and we are really big fans of live trading tags. So something that comes back down from pre-hitting it does not matter as much as if something came down in the live tag. So we don't have a 0% live tag from the weekly Fibonacci yet. So keep that in the back of your mind as we open up. If we do start to dwindle past that algo and start to fill it up, we will hit the 0 line and potentially break it. If we stay above this algo right here, and this is going to be 443.93, 443.80 right here. We stay above that, we have an opportunity to come back up from down and start back testing resistance for confirmation. So let's say it's a low flying day back up here, and it comes all the way back up to either the 666 moving average 5-minute, or we start coming up to some of the weekly fibs again, because we're going to get 2360 right here. That's going to be huge over under. So something like this, where it comes in, price action stays above the algo. Here's the pin, gets above the 2360, holds, will push to the 3820. So that would be a target for your long with a confirmation over 44436. Now that could run into the 666 at some point in pre, and that would be a really good early long on futures or whatever else you're trading here in the morning for tomorrow's pre. Now, we don't know what's going to happen with a whole happy duty rally here, where if it's just going to pick back up on the daily chart and start slamming back up. Who knows? We haven't hit any kind of fresh lows out of the big low where we shied the 100 EMA on the daily chart, right? So, you know, this could easily go either which way. We haven't broken out on like RSI one way or the other. We broke above it, tried to hold it. We got a micro higher, higher low. Of course, that was between CPI and quad witching now. That kind of messed this part up. Now, if the RSI as well is kind of a lie with the MAC coming down, it has a small sell wave that could easily pick back up as well and continue to maybe force up some of those gaps. Now, we don't have the best of the best looking chart here. So if it does let loose, fine, no big deal. We're just going to have to deal with it. But right now, until it's under the zero line, I'm going to stick to the zero line of support. So above this, we can hold. And even nothing crazy, just a back test to 10 SMA, back test to some Fibonacci, like we said, the 3820. Not looking for a full-on rally. If this bounces back up and hits and then continues lows for the continuation of September volatility, that's what we have to adjust to. That's market's going to do whatever we want. We got to trade the chart in front of us, right? So with that being said, we're going to look for those key points of interest. We're going to look for the algo over under, which is going to be one of the main points there between 44380 and 44393, and that's going to be it. So tune in for tomorrow's follow-up on this prediction. We'll see how we did. Thanks.